So we have our daily where we consolidated up here at these highs, and then Tuesday we put in a nice move lower. And as we closed below this weekly open, this was the main point of focus that I had for this week as we watched the previous week react around that area. Okay, and when we look at the weekly open and we look at the next week, how we close, come back up, but we're really wicking away. So we had this previous low that we caught that it rejected from. So previous highs and lows and opening price are going to be the main three key areas that we're looking for price to have reactions around. Um, Price comes up, gets about 50% of this balanced range, if you will. Price came up and right back down, closed. And then we got a major sell off out of this level. And we've been really rejecting this level down here, um, which is kind of this Monday key level where we gapped up and price is really holding in here. We can see the candle bodies so far. Okay, so that's kind of been the rejection level. Come all the way back up. We're looking for price to rebalance and come back up into this level. This was a nice move up for the start of this week. And if we look at the weekly, this is almost like a weekly order block. And then we have price closes below it, price comes back into that, but really it's that weekly open. And then we just have price kind of hanging around Tuesday, Wednesday. We get this high ran on the daily. Okay. So Monday high gets ran, Tuesday high gets ran along with the Thursday high, and then we get that nice sell off. Okay. So I mentioned a few times in the chat about taking QQQ puts up here as this area was holding quite nicely, and we're looking for the sell off kind of rebalancing this area back down here. All right. Also, when we have volume imbalances, we tend to have um, there's a propensity for price to kind of hang out in that area to really um, put in price action where there was none. So this major gap up, you can see where price hung out if we just highlight that volume imbalance. So sometimes you get the up and down straight through it, but with the structure you can see where a lot of the candle bodies hung out, and that was in that range. Friday I wanted to see continuation, and we have some points of interest on the 4-hour chart that I was looking at. But basically with this strong close, again, we're closing candle bodies below these candle bodies. And we have a lot of imbalances below us. Want to see continuation. Okay, so manipulate. We are reaccumulating shorts after this sell-off here. And then if we look at just basic ranges, here's the high. Okay, and here's the first low. All right, so if we have that highlighted on the daily, so this was the range we were working within, you can see that this week, every time we hit OTE, price was failing to close above that level. Okay, we don't get candle bodies closing above that level. And then we get the sell off from there. Okay, no close out of this range yet. Just a run below and then back up into the range. So something that I'll be looking at for next week is we do have a prominent high. Okay, so I'll just be looking at Monday. What I would like to see is some sort of OTE entry here for continuation lower. Okay, we still haven't balanced a lot of this. And I've talked about this in the chat too. Okay, if we look at the monthly, okay, we've been way above EMAs for quite a few months now, and we have yet to run any lows for about 1, 2, 3, 4, 5, 6, 7 months where not one monthly low has been ran. All right, so just because we might be in a move downward, and we might not, we might get this month, November, just taps EMAs finally and runs a couple month lows. That's a big deal. So we have 3 that are pretty close. So if we got like a move down um, into your fast EMA right here, your 21, uh, I'd be looking to continue bullish out of that. But there's also, when we look at this, is that because these haven't really ran lows, it's healthy for the market to come back down into here. Okay, and we can see that along the way. So that's just my thought process of, am I watching for um, bearish structure to still continue to be put in on like the daily and 4-hour time frame. Okay, weekly we were back down to the EMAs. We still have this huge gap here, and that's what we saw on the daily. All right, so we'll see what kind of continuation we get. All right, back to daily. Okay, so 2 things that I would be highlighting is this range right here. If we're going to continue lower, here's the other thing too, is that look at the EMAs for the daily. We've now kept closing deeper and deeper into these EMAs. Now we're under the EMAs, and Friday failed to recapture and close up into EMAs. Okay, so now this is the only EMA that's holding us, is our longer term EMA. And so what I would like to see is another rejection of these for a lower push. So Monday, I'd be looking at this Monday opening price, probably drive up in here somewhere around OTE and push lower. And maybe we'll get the candle body close somewhere down here. Who knows what kind of news we get over the weekend for how big we push. Or we get a small range and then we get Tuesday high of week where it's like up close, small up close, and then Tuesday pushes lower. Okay, but I'm watching this. Still watching this range as well because we haven't closed out of it. Okay. So I'll be watching the EQ of this range just in case. We get one more push up, and that would be like a Tuesday high, Monday, Tuesday high, and then we start the move down. Or we recapture EMAs and we start closing higher. I'm not married to one or the other. Just to me, it looks as if price is trying to reprice a little lower. Everyone kind of good with the daily of this week so far? Market structure, ranges. Just kind of viewing it from a very like basic market structure level. Okay, now we go down to the 4-hour. We'll just take this off for now. All right, so 4 hour, what do we get out of the 4 hours so far? Here's our weekly open. Okay, and as we look at price around that same weekly open now on the 4 hour, we see how price is reacting. Every time we get above it, price immediately closes below, and it's failing to take out highs that have closed above the weekly open. The highs that closed above the weekly open, those highs are getting respected. Okay, we had one little bit bigger wick on the 4 hour, and that was that Thursday high that got ran. Okay, so after that daily high got ran, um, we had a really big candle that closes below 5 candles here, about 5 or 6 candles. That's telling me that, again, that this weekly open price is respecting it. Okay, so just very simple. We put in this new high with a rejection. Okay, and so this is where around close, around this time, this is when I was looking for, or I started putting in originally on this day for the 620 puts and looking for shorts or going short with futures. Okay. Where was, oh, here was end of day. Sorry. Yeah. Uh, and this is another thing that they like to do just because of options. Okay. Is they don't really give you this, the momentum into the OTE. That was all at night. So that was your PM London sesh. And then you get pretty much market open down here. And so now everything that was up here is now opening way down here. Okay. So on this last candle, that's when I was grab my options because I was accounting for this to happen. And we get a nice sell off today, finish out the week to 2.5. Okay. The target that I had is, if we're just looking at the balance of market structure, okay, I'm looking for this area to be balanced because as of now, we do not have any down close candles from here to here. And so if you've been in any of my streams before, we've kind of talked about this where we're looking for price to balance, and we can look at the candle bodies for what areas really need to be balanced and what hasn't. And that lesson can be seen up here. Okay. As we see price continue to rebalance itself, and I always like to do this little, just this little exercise, if you haven't done it before, where you take off the wicks and you can see where the bodies have balanced. Okay, and so we're looking for balance within here. And you can see at that weekly open, this body held and everything was balanced. Just very, very basic concept of market rebalancing itself. Cool. Throw those back on. So this is my target. Um, to 24,659. And I was looking for price to rebalance this area. Okay, we didn't get the full rebalance. We got a wick and then we got a retracement back up. So looking at the 4-hour from what we've completed so far, we have highs put in right here, and you can see where the candle bodies have closed in this 4-hour range. And that's pretty typical for Fridays to close at EQ of ranges. So a range gets created and Friday will find the EQ. Why? Because depending on what happens over the weekend, this makes it hard for people who are trading options to say, well, which direction do I buy my option in? Right? Kind of makes sense. So at this point, it becomes a guessing game. Or you've bought enough time. And so if you're wrong, you're not taking too much of a hit. If you're right, it ends up working out. But you'll kind of see this happen quite often. So in relation to the daily, we have this volume imbalance right here where again we've have a couple wicks in here. We finally have a candle body that closed down through it. We have no candle bodies um, above it. Here's Wednesday. Okay, this is Wednesday low. So then we're looking at on the daily, this is going to be the fair value gap that's put in. Right in here. And that's right in OTE of this range. And again, we have this Monday opening price, which is the weekly opening price, which is right in this range as well. Okay, so for continued lower pricing, I would like to see a rejection of this area, or at least a rejection and then a Tuesday high where we come back higher up into this area and reject, and then get continuation with a Tuesday high of week if we're going lower. And then again, we have this major gap that's sitting right down here that we have yet to rebalance. So we have a down close candle. We have no up closed or down closed in this area right here. So to me, this is a major volume imbalance that I would like to see price fill. And I'm kind of looking at this area of price as the buy model back into a sell model. All right. Okay, so if we look at hourly ranges, we can see the same thing kind of over and over where price is balanced. And so it's real easy to view, like if you, like here's an hourly high put in, that's still a high time frame, and then the low. And this range has become balanced, and then we leave this range. Okay, this high becomes the next range. All right, we get a build up below the range, rejecting 50% a few times, but not closing below. And then we get the move back up into an OTE, rebalancing more of the range, and then we get the sell off. Then we get the close below, and you can see this candle right here. If you're just marking out ranges, when we close below, you look for a move back up into this range. Okay, that was Thursday at New York Open. We came down. We rejected a V-type recovery, but it was just to rebalance this range. And you can see that very clearly on the 15-minute. Okay, the hourly range is highlighted here to here on the hourly chart. And you can see the 15-minute just rebalances itself. And look at where the candle bodies close, touch the previous day low, which was the touch right back into that range that we had. Boom. And then the continued sell-off. And we had this range where we really didn't come back up to 50%. We had price continue out of this range, and look at what the 15-minute does. We get the sell-off, and then we get the return back into the range. And I'm just showing you guys this because this is just really like basics of paying attention to ranges and looking at price action in a very mechanical way. To me, this low is not a reversal low. This is more of a retracement leg where we consolidate, manipulate, we're retracing hard. I'll be watching 50% of this range. This is in the daily fair value gap. We did have this like 15-minute order block put in. And again, when we look at this, the previous range, there's a lot of consolidation where that means price is just balancing itself before the next move down. Okay. So we would really have to get some like big higher time frame candles to basically go from an OTE entry down here and then drive through this area for me to think that we're going to get continued higher prices on the higher time frame. So this 4 hour and on the daily we showed the week before, again, it's just a move down, run liquidity, and then when we look at this leg back up, notice how there's no like, we don't set a low, take out that low, come back up, come back into it, and then go higher. When you see these kinds of moves, those tend, and that's the big Friday wick, right? To me, those are reversal moves. And so to me, that signals that that's just a temporary low. And you can see the difference with how price acts as we're pushing lower. Okay, even with this large wick being ran and this big sell-off, we don't just get a continued sell-off and then push higher. There's actual retracements back into OTE. before the next move lower. And you can see how we get that retracement to OTE, pushes lower, back up into here, but we're not closing higher. Okay. And so far on all these down moves, we're not getting that. This one didn't come back down to OTE and push higher. We just ran it. Okay, so a good thing to back study and to look at as far as price action goes. And you can pick, I don't know, depending on what you have for trading view and how much data you can look at when price is moving in a particular direction. You know what I mean? You can actually like go way back to the buy model and you'll see after we put in this low, like you'll see how price reacts to push higher. Gosh dang it, come on. And you can use Gambox, VibTool, whatever, but there should be some sort of move back down into the range. That's OTE, and then it pushes higher above false highs that were put in. Okay, so that was that kind of that Monday gap up. And we can see after the low is put in, we get respect of the 50%. It's coming back down to OTE, and then we're setting higher. Even right here, when we get the move back down to OTE, it sets in a false high, and then you should get a 50% retracement or OTE depending on what they want. Okay, 50% push higher. Consolidates, a low's put in. And you just kind of back test this along the way. Highs put in, 50% is not hit. Consolidates, manipulates 50%, pushes higher. Okay, but so that's what we're experiencing, but in the opposite direction right now. Okay, so I'm gonna need to see some sort of major area ran and see that type of price action around it. Otherwise I'm just watching ranges and I'm watching for OTE retracements to keep holding. So everything's fractal, right? And so like if I just highlight this 15-minute range, let's make sure this shows up on everything else. So let's say I highlight this 15-minute range, right? We've broken below it. We've came down here. We're back into it. And I'm expecting price to either hold this range and either balance it. Okay, so if I highlight these candles, and this is pretty much the balancing point, and we'll just make that green as we need to balance this with up close candles up into here. And then we just look at higher time frame around this. Okay, so here's that range. We can get rid of all this other. We'll just move this back over here. That's the volume imbalance. Okay, so here's our 15-minute range, and here's that 15-minute candle for balance. Okay, we have fair value gaps that haven't been touched down here. So there might be some sort of 50% retracement and then a move up into here and then a move back down. But look at the areas that this falls in line with. It falls right into where we're looking at for higher time frame like OTE. So this falls right in here in this OTE area. Falls right in the fair value gap area where we have a inverse fair value gap for a Monday. So that might be highlighted. And where does the middle of that inverse fair value gap? Oh, it goes right to the middle of that range that would need to be balanced and would hold if we're looking for lower prices. So I'm always looking at higher time frame for confluence and then breaking it down and looking at the ranges on the lower time frame and what has price done and what is it showing me. And so as we go, and for the higher time frames, I want to see how price is reacting to the EMAs. Because it's the weekly chart and it's been bouncing along the EMAs, it's been easy to kind of, not easy, but you're looking at anytime you get any deep retracements into these EMAs, and we haven't even had a deep one yet. It's all been on the low, the 8 and 21, the fast EMA, and it's been bouncing along. So is it possible that we get here's that Friday low? Is it possible that price just gets down into here and then continues higher? Yeah, I would look at this as now if price dug down into here, I'm going to be looking for bullish price action out of there because that's what it's been showing me so far. But this got really far away from the EMAs. And you can see that when price gets far off the EMAs, we usually see a move back down to it. That's just healthy market behavior. We never see the market just like have these massive ups where it goes way up like some of the stocks you see. Even right here, this is a pretty big move away from the EMAs. And then look at the weeks compared to this week. It's almost like a consolidation pattern, but like slowly trending up, but smaller ranges. And then boom, back down towards it. And then we get a push back up. Usually when we have stuff like this, that's usually your retracement legs are like hot and heavy. Um, what do you mean, one direction? Like I'm not using it for up and down for different price action throughout the day. Yeah, so typically I have a ton of videos on my YouTube. So you'd have to thumb through that. I can make some more basic ones and post them in my channel. But I do have like price range balancing and all that stuff. I have I don't know, I have quite a few videos on my YouTube channel. So typically, Darius, what I'm looking for, is because I want to go with the flow of order flow. Okay, so I'm looking at, like, here's a great example. Okay, order flow was showing bullish. Okay, this was a lower time frame fib. All right, but this was a major retracement down. And if order flow is bullish, when we manipulate down into an area to either rebalance or grab liquidity, okay, and if we just fib this major leg up, all this was an OTE retracement, okay, on a higher time frame, probably on the daily, if not just this 4 hour. Okay, this was a 15-minute fib that we looked at, and so this is the kind of stuff I look for because we've consolidated, we've broken out of the range. We come back into the range for at least 50%, hoping for a little bit deeper retracement. OTE, didn't get it. And then look what that was. That was just one standard deviation. And this is more for like a daily retracement. So we got this leg, we got basically one standard deviation to where the highs are at on this 4 hour chart. And you can see, look at price, look at how nicely it reacts around this one right here. Candle bodies aren't closing above. Every time it gets up there, it's wicking back away. Okay. Now if we take the smaller one that we had, this was like the 15 minutes. So now we're taking price moves out of the range, comes back into the range, at least 50%. And now this was a lower time frame example of, as we move back out for bullish order flow, we still want to see another at least 50% retracement, which we get on the 4 hour. Okay, and you get a nice little example of 4 hour time theory with your 6 p.m. candle and your 6 a.m. candle running that 6 p.m. low, okay, for timing, time delivering to time into 50%. And that 15-minute or hourly, you get your 4.5 standard deviation. All right. And so as price fails to show that it's making higher highs, we can do the same thing, but now I'm just looking for retracements going the opposite way. Okay, so we have our prominent high and a prominent low. And you could start off with this low at first, okay, but as this kind of makes a really nice big wick, you can look at it two ways. You can look at it as it's a false breakout, but look at all the retracements that of order flow building for shorts. Okay, and what do we get on that Friday? About 2.5 standard deviation from there. Okay, what's at the 4 to 4.5? That would be a full-on market maker sell model finishing the sell model. Okay, same as we got over here as we left the consolidative range and we got this buy model out of the range. And it was a pretty fast buy model. There was very little retracements through here. It was consolidate, come out of the range, come back into the range, and expand. Okay, so when we see a lot of the overlap now, and so this very little rebalancing, right? Gap up, very little rebalancing on the way up. What's price doing on the way down? Rebalancing, rebalancing, rebalancing a lot, rebalancing. Boom, back. This major leg down, rebalance. Okay. So then whenever this completes the sell model, one, I want to see a nice reversal pattern, something similar to this where we uh, take out liquidity on a higher time frame, we move away, and then we come back for the OTE, and then that's when I'll be looking for a buy model again. And it might be we might get more of a faster buy model because a lot of this is rebalanced. So there's the ability for price to move through this area faster because it doesn't have to stop and rebalance along the way. It can just move through some of this area because there's very little to rebalance in here. It's like very, very small portions of candles versus this whole leg needed to be rebalanced. Plus a volume imbalance, which means so it stops here and that's why we get a lot of this price action in that area. Is that all? Is everything kind of jiving? Like how I'm looking at um, the market structure, candles, what I want to measure, what I want to see respected. If this was not going to be respected, then we would see price move out of the range, right? And that's why it's good to like just look at ranges because price is going to do one of two things. It's going to consolidate in the range or it's going to move out of the range, either up and out of it or down and out of it. So, and you can look at how price just reacts within a basic range, even just at the premium and discount level. And that's all fractal. Okay, so if I just took this high that was put in and the next low that's put in on the 4 hour, yes, this breaks out of the range. However, it doesn't close out of the range. And we're not closing above the range. Every time price comes up here, it's dipping down. Gets above into premium, it dips down. We finally close out of the range and we don't even make it back up into there. This candle's like right on there. This is the only little clue you get for that. And so this candle comes out of the range, and this is the next high that's put in. This high right here. And here's our next low. That's a massive range. Price runs out of this range. This is also the range where look at where this range has equilibrium at, right in the volume imbalance. And another volume imbalance within the range. Price spends a lot of time in here, but fails to close out of the range. So if we're looking at longs, then we need to see like there was no move out. If we look at this new range down here, I would have loved to have seen like this rebalance and then push higher and then push above this range for higher repricing. How far back do I go with my fibs? Well, that's the thing is I like the 4 hour chart because the 4 hour chart kind of shows you all the cycles of price, right? And so when we look at the 4-hour chart, like you can see all the cycles happening. You know, like here's a low, price cycles back up, cycles back down. You got your buy model, sell model complete. And some of these are very interesting because they're not giving like true, like on the daily we see, and on the weekly we see price kind of just chugging along the EMAs, and we're not really getting some of these like true uh, retracements for entries. A lot of turtle soups without retracements back into even 50%. I mean, if you took these lows, those are equal lows right there, and you put on the first high, okay, even on this very prominent high, there's been no retracement back into 50% of this range that I measured. Zero. So that kind of stuff I look at is like, well, when is that gonna, when does price reprice that? You know, just an idea versus this, we set in all these lows, price runs a few of them, this one, these, okay, and now we get price moves up. Oh, there we go. Okay, we get a nice retracement. And you throw this all the way across. Okay, look at how price reacts at one standard deviation. It starts a sell model to rebalance. And where does it go? Back into this range. Okay, so we still have to look back. So when you're talking about how far back do you go with fibs, well, it depends on what price is showing me. If we came back down into the top and then we start closing above, you know, these ranges that were put in, and maybe that's why this didn't give that, because really this was the liquidity run. This is just coming back down into the range, so it's not going to give you another optimal trade all the time. This one kind of gives you a deep retracement, but we still get the run lower back at OTE. And so that was a previous low, and where does it hit? It taps OTE perfectly. Okay, so see this range put in 50%, 50%, OTE, and it's gone. Again, it gets to that your one standard deviation, and we get a reaction, comes back down to your 618 fib, and you can see where price reacts around these fib levels. I mean, there's a reason why there's a fib tool. People use it all the time for trading. Okay, and there's other ways to look at this as well, right? Balanced price range. All this did was this came back and balanced this big leg down, and it just happens to sit at these fib levels. So that's why I also like, you know, we'll talk about in chat is, you know, give yourself a chance if you're having a hard time getting on the right side of trades. Give yourself a chance by saying what is the probability? Okay. If we've ran a low in an area of a range that's so far as holding, well, the odds are I should try to go long here and not try to short this for continuation lower. And just view the market in a perspective of what are my best odds at this point in the market, and look for lower time frame price action to confirm that. And we almost get the 4.5 off of this measurement leg right here for where we're at. Okay, that's a nice 4.5. Here's your 4. Um, I like to swing. I'll look for times when it looks good to swing options. So when like I don't necessarily like look to take things here. Um, but when I start seeing price show me what it wants to do, and when we're looking for like OTE trades, if like here we have New York comes down back to OTE, right? We have this area hold. We come out of here OTE. Well, then this is, this can be good for swinging options. You go 2 days out, but because you're getting this, all the volume of price driving lower, so the calls, you're going to get really good entries on these calls. Now, depending on this candle, if New York AM opened up and dipped down before, or if it was already low and it was already on the way up, this dip could kill some of your premium. But these are really nice when expected move is going to be overnight, because then you wake up with just your premium spiked. So I should have taken, I just took this for the next day. I was taking 620 puts in here, and I think it opened at like 613, and then I sold it. I had a level I was looking at for that day, which was 609.50, and it went even lower. But I traded my plan. It's you can't always like bottom tick and top tick everything, but if you can set yourself up for buying in discount and selling in premium, then your futures trades or your options trades should work out pretty well. The problems you'll run into is when price is consolidating and it's setting up for a move, because you might buy an option and then it could open up at it or somewhere around it that's not in your favor, and then that time just kind of killed the premium. So, all right, anyone have any questions on like ranges? Kind of how I'm talking about market structure. Which one? Are you talking about today's price action? So this range right here. Okay. So let's kind of just balance this little area out down here. So price action is fractal, right? So it depends on time you're looking at, and then you're meshing from your higher time frame ranges into lower time frame areas. Okay. So if I was just looking at the 4-hour right now, if I would say, okay, what range are we in? Here's kind of like a prominent high, right? It's kind of flat, but I'm just going to use this one because we had really big price action move downward off this high. Here's the first low. So we kind of drove out of this range and came back up into it. So I could look at this as, okay, price is moving around in this range. Yes, it closed below it, but then it came right back up into it. Okay, so if I'm looking at this range right here, I want to see how is price reactive in the discount and premium of this range. So far, we haven't gotten up to the premium side of this range. Okay, we'll just get rid of these other things because those were 15-minute. And so when we looked at the daily chart, this is the daily fair value gap, this being the top and this being the bottom of that gap. Okay, so we want to see what does price do if it gets to the premium part of this range. Do we start seeing candle bodies wick away from it? Or does it look like they're driving through it as if they want to completely balance this or move higher? We can take it to this low, and that's where I had it started out. And this would be more of an optimal trade entry. But technically, this is a range. You got highs and you got a prominent low. Okay, and then really you got no 50% retracement of this range right here. All right. So this would be a level that I would be watching because this high to this low, there was no movement of price into the premium of this range. So that the premium of this range right here has been untested. Okay, this is a bigger range and we can see what's going on here. So if I was to fib this, this is what I would probably use for a fib tool just to look for where does OTE sit in, and it all matches up, right? But truly, if we're looking at ranges, this is a range itself. We have this 3-bar low and we have this high put in. And so when we fib this, OTE sits right at the premium and discount or equilibrium of this range. Okay, so any move up in here, I'd be looking to see if we get some sort of rejection on the lower time frame. So yeah, so the candle colors, and I have videos on that, are for the 4-hour time theory, which is price is usually drawn to in its cycle of pricing, price usually goes to the same time frame because there's 3 sets of pairs, right? And we can kind of just look at that in retrospect. So we kind of have some key levels on the 10 a.m. candles, all the closes. And even all the way back here like these closes have been kind of reactive, right? Candle body's not closing below them. And then we see price drive all the way up here into the middle of this 10 a.m. candle, filling this 10 a.m. fair value gap. We can see the PM candle drives all the way down to the 2 a.m. high. All right. And then a nice target with this would be this 2 p.m. high. Okay, so depending on how this manipulated on the lower time frame, but you'll see that over and over again. And it can be sometimes when the 4 hours consolidated, sometimes it's very minute and it's hard to see. But it happens just like the daily. So like you'll see this opening price, this candle drove up and basically the high was set right at the opening price. So it's just areas for that price is going to be drawn to on the 4 hour because it's you get a lot of the same paired times are targeting each other in past areas. So I have videos on that if you want to go check it out. Yeah, exactly. Time revisits time. Let's see. So Tuesday, I only took, I just took a couple trades today, not many. I was kind of running around this morning, just adding to some more evals, trying to get some more evals passed and stacked up. Tuesday, Wednesday next week, price starts rejecting around OT. You'll be looking to target the lows of the range. Yeah. So really, and we'll go back to the daily. So, all right, see how like the daily does the same thing. Like Thursday, you have this Thursday open, and like Thursday targeted this open, and that's as far as it went. Okay, Friday targeted Friday low. So what I'm looking for is because there's a Monday that sits right in the fair value gap and there's opening price. Remember I said that typically opens, highs, and lows are sensitive. This candle right here, yes, it was a strong reaction off of running a previous week low. Okay, that's fine. What I'm looking at is now on the daily range is if we are going to get continued lower prices, here's the current daily range, this high to this low. Then we should not see price looking to close out of this range. And instead, we would be looking to see price revisit optimal trade entry, and it can be deep because it can be a rebalance of this candle and then move lower. And so then if I look at like where Monday and Tuesday is, right? If we think about weekly structure, so if we're putting in a Tuesday high of week, okay, one, I want to see Monday like come back up into this area and either we get a Monday high of the week, which means the week's going to trend bearish, at least till the objectives met, or a Tuesday high of week, and we have a Tuesday low here that still falls within this fair value gap. And so like if we get a small range Monday and then Tuesday runs Monday's high in the fair value gap and we start getting a rejection, that's what I'm looking at for the rejection out of this range. Because I'm looking at what's balanced here, right? If we're going to continue to balance what's below us, really we could just throw a wick up here and that's good enough for price to continue lower. This is your breakaway gap. And then again, if this is a weekly order block that we had measured out, is it possible for price to wick it once again and push lower? Yeah, that's possible. So we need to see, negating that would be candle bodies closing out of this range with continuation. So again, it's the same principles of how we look at ranges on any time frame. Is price reactionary in premium or discount, and which way are we headed? But yeah, I would like to see this get rebalanced. This is kind of funky area price. Yeah, were you not in here when I went over like the monthly and the weekly? Yeah, so monthly's way above EMAs. Okay, we've had 7 months and not one monthly low has been ran. And we're way above the EMAs. So here's our first monthly low. This to me would be a good daily market maker sell model to rebalance. I'm not saying that we're going to get complete death and destruction on higher time frame. I'm just looking at like what's typical like probability for the markets. And it's like not one of these lows have been ran and we're way above EMAs. So would it be healthy for a price to come back down here, even run a couple of these monthly lows down here? There's a monthly fair value gap and a previous monthly high. Yeah, I think that'd be totally healthy. And I think that we could see a retracement to there and then continue bullish. Again, just like if we leave these up and we're watching how price reacts around them, like we'd have to have some pretty major like months where we're like really cutting through these EMAs and showing an unwillingness to hold them. But as of right now, we're trotting along the EMAs on the monthly. Yeah, exactly. Mean reversion. And you just go look at the weekly. Like, is it bad if the weekly comes back and tests this? I mean, look at this move. Then we had a massive push back up. And this almost showed as if the weekly was going to flip bearish, which it did not. It did this, but then it just pushed right through. Okay, it was just a massive retracement. And all that is just rebalancing and taking out liquidity along the way. And so we had this high and this high over here where price here's this range and we just got a real exponential. See how price reacts off previous ranges? Like this was the range that was built to send price lower, and I'm highlighting that that low and that high where price was building shorts in premium and then delivers lower. And you can see price still reacting out of that range. Here's the range, high and low. That was the retracement before price pushed lower above these previous all-time highs. Look at where the candle body holds. Okay. That's why I like when ICT talks about old highs and lows. But you have to understand what you're looking at for old highs and lows and and that. So if these were, previous highs, right? Really this one candle kind of sets a high and a low because we really don't get a close below it right here. It comes down and wicks below it but doesn't close below it. So this single week basically was the range that price played around in before it retraced. I mean, just coming back into this range, all that is like a deep weekly retracement. It's nothing crazy. Let's see here. Boom. Same thing. This Thursday kind of set the high and low of the range. High, low. Price closes out of that range. We get the tap back up into it, which is that weekly open. But see this Wednesday tapped back up into that range. And now we're getting EMAs kind of closing and rejecting. And it's starting to flip. But see how Friday came back up to the EMAs and it rejected? So we could see price come back all the way up here for a Tuesday high of the week with continued lower pricing. And where we looked at on the weekly, well, like what's sitting right here? We got equal lows down here. We rebalance this. I mean, it's like it's not anything crazy. But when you can get into some of these shorts, like you get some big days when price decides to, move lower pretty quickly. Look at these up days just kind of ranging up very small. Then look at these down days. This this leg was I did so well during this, and it had just really nice like short retracements up and continuation. But that's the range that's highlighted right there. And we just got a rebalance of it. Dude, all it did was just remember market likes to do things in threes. Order block, rejection, sell off. Order block, sell off. Consolidate, manipulation leg, run liquidity into the order block, bigger sell off. Yeah, so we'll see. But that's what I'm looking at. Yeah, it's recorded. Yeah, and who knows, maybe it's It's November's the down close month and December continuation higher. Or December manipulates down a little bit lower, then we get the Santa rally. So if we can get November to kind of continue lower back to the EMAs, December manipulates these highs, runs these 3 monthly lows right here. Like to me, that'd be great. This monthly fair value gap and take out these 3 monthly lows for December and then start pumping up after that and then rip up. That that'd be great. I think that'd be a great play on price. and it's kind of trusting what's been happening on the monthly chart so far. Like here's probably the last price leg where we got a really decent amount of months up, and then look at we got 3 down months though. Then a bunch of months up, 1 down month back to the EMAs, and then boom, pushes higher. This is kind of, might be a little tougher to trade. Monthly starts real big manipulation lower, runs a monthly low, but then comes all the way back up and closes back up here. This just rebalances this leg with a deep retracement before, pushing up. So yeah, I know, but I mean, who knows? I mean, look at this month, and this month has a pretty big up and down, 3,600. So it actually went more than that because it goes all the way down and then jams all the way back up. Liberation Day. Oh yeah, if you don't think that they're going to use all that stuff to their advantage to get people off sides, and they're gonna, if you go back and you look at like old price from like a long time ago, like every month is like this size right here, and like it would probably be painful to catch 50 points in a day. It's like a blessing and a curse. We're spoiled with volatility because when you're on the right side, the potential's there. When you're not, be painful. Yeah, I kind of like November closing lower, the weekly maybe getting down into here. Um, this was kind of the old highs. So if candle bodies held this, almost like this is the weekly order block, right? And we can see how price came in here. So if this leg closes above these highs and we get this down close candle, then a massive candle back up for the week, and then it's holding this. This wouldn't be bad to revisit. And then we have these gaps in here, so then we get some good weeks that close green through here as we push to all new highs in December. We'll see. So yeah, and again, again, I try not to get too like caught up in like, oh, this would be great, that would be great, and just marry it. Because if that doesn't happen, I don't want to just be like so focused on one thing where it's like, okay, I need to see price do this, like it has to do it. You know what I mean? But I try to have an open bias of what's healthy for the market. And I try to take into context these higher time frames as to, is this appropriate for a price to come back down into a deeper weekly retracement when it hasn't done it since April. It's just been cruising along the top. So is a deeper retracement healthy? Yeah, we could see this fair value gap and these old highs get retested. And that would just be a movement down to this deeper EMA, which is the 35, I think. What is this? What do I have these set at? 34. Dun, dun, dun. Oh, the 48. So here's the settings. I think these are just um, the standard settings that it comes with. Yep, got to be flexible. What else? You guys got any other questions or anything you want to look at? If not, we'll wrap it up and let everyone get on with their weekend. I know there's a lot of like there are some newer folks in here, and I like doing these sessions because I do like talking about just some basic principles of market structure and ranges and all that because I think it's helpful for new people. Um, and it's a good base to continue to build off of and to go back and like the stuff we talk about. If you just go back and look at it and back test it and see how price um, reacts and you draw those ranges out and see what price is doing and where it goes to and what ranges it revisits, um, it'll kind of help you one see the market a little bit clearer, and then it'll also help you with where you're looking to take positions at. And so that way you're not accidentally like you're in discount and you're trying to short. You know what I mean? Or vice versa. You're in premium and you're like and you're so fixated on, oh yeah, the market's gonna go higher, but you're longing in premium. And I think JD mentioned that this morning live. Everywhere he's looking, it's like he wants the short in premium and long in discount. Because the odds are for you with that, right? Yeah. And it's hard. The market's meant to like get us off sides and make us second guess ourselves and do all that. Trust me, I've been there. I've told you guys stories about that where I'm like I've made those bonehead mistakes in the past. And it's something, you still work through because if you get too caught up in one thing, then you can get yourself off sides. The question is the range. Yeah, every price level is a premium or discount based on time. Yeah. The 1 minute is pretty interesting. I'm working on stuff and you can see Like this is a good example from today. So this 1 minute range right here, notice how price comes down, but it doesn't hit 50%. And then it comes out of this range and now it's overlapping itself, basically rebalancing itself. And this is just liquidity run and pretty much a rebalance to this high all the way, anything that was missed in here. And then it comes down to 50%. There's a lot of stuff where price revisits ranges on the 1 minute where 50% was never ran. And it either rebalances it or uh, goes to the 50% mark. And so you can look at that across the board and see like some of these sessions. And the 1 minute gets a little tedious, you know, so if you guys want to kind of like back test this with me, you can, but like look at, here's a high, here's a prominent low, okay, price retraces to 50%, then moves lower, right? So then we just go to the next 1 minute range. We got high, we got low, and we have no 50% retracement. We have back into the range and rejection. This range that was never, and then boom, we finally get the rebalance of that range all the way back there. Okay, and this is 1 minute, so this is all like, obviously it's happening hours later, and it's all fractal. But I've started to mark out like 1 minute ranges that haven't been balanced or haven't had 50% retracement. And you can see like how price will come back to it. So here's a range, this high, this low, where we haven't really had price come back to 50%, and it's kind of sitting in the daily fair value gap. Here's your prominent low, this high. You know, and does price move into, what does price do? It taps that range, and then that's the rejection. So it's very interesting that like some of these ranges will play out like that. And then you can go to the next one where you have, here's your high, here's your low, and basically this just got 50%, okay? Then price failed, and then but then what do we get? Now we get price balances it more. But you can see that you're still getting kind of rejection off of that 50% level of that range. So it's kind of interesting. Some of this 1 minute range stuff where price revisits it. Um, yeah, just don't get like shiny object syndrome and focus too much on stuff that's not going to benefit you in your trading right away. Um, but yeah, I just thought it was interesting. You know, so I'll just kind of highlight some of that and be like, oh, okay, so that's something that is going to be a draw for price at some point in time, and it usually happens within a day or two. So, all right, what indicators do you use more? Um, these are pretty much all the indicators I have. This just colors the daily candles. So I have my daily targets, and this is the same thing for the 4-hour candle. This I barely use because it just gives so much. Um, and yeah, price can be reactive around it, obviously. Um, but I don't like my chart being super messy. Um, this is an indicator that I don't use that much anymore. This is more from the currency merchant. I'll use EMAs for higher time frame because I want to see when we're looking for any kind of mean reversion back to the EMAs, or if we get a deep retracement into EMAs. Not so much lower time frame because it's all over the place. ATR levels, I use those because they're really good. Just average true range of where the day goes. Okay, and that has a couple different positions, so you can look at like price long term. This is day, multi-day is weekly, swing is monthly, position is quarterly, and long term is yearly. So if I was to look at position and I wanted to look on the monthly chart because I wanted to see where we're at for the quarterly cycle. It can give you kind of these levels of where we're at, and it's all the same principle. Okay, so this is where the previous quarter closed at. So that's kind of like our mean for average true range. And it's just all giving you like the average true range of where price would go for this quarterly. So 3-month period, right? So if we look at price closed right here, and we can see every time price hits the mean, it kind of rejects and it's pushing higher. And then we get, at some point in this month, we got to close above the bullish trigger, and then it pushes up 1, 2, 3 and closes at this third. All right, close above the bullish. We hit this second level, and this is all kind of like fib based and average true range. And then look at, we close below it though, and then now we come back up into it, and now we're rejecting. Now we've closed below the quarterly bullish ATR trigger. Okay, but we're still rejecting the mean range. Okay, here's our bearish trigger. And you can do this on any time frame. So go back to the 1 minute, and I go to my day levels. We come all the way down here. Okay, this is a -1 move. All right. So this is saying that for the day, basically puts below, here's your bearish trigger, right? And here's your mean again. So, and we kind of showed this, it's moving along, consolidating around the bearish trigger. Every time it gets above it, it pushes lower, it gets above it, pushes lower until finally now it's rejecting it. One little push above, and now it's rejecting. And we got a -1 ATR move, which is 24,628. Okay, and we got that. So this is a big move for the daily. So this also is beneficial because you could see how price reacts around it. And when you get stuff like this where price doesn't touch it, but it's showing like a sensitivity, sometimes you'll see, if you're already at a big move, you'll see price run down and then it pushes away. Okay, and we got that. Then you can kind of see which levels are kind of holding. It goes back to the bearish, kind of shows an initial rejection, rejects but isn't pushing back down. Now it drives through. Now it retests it. Okay, now we're pushing back up, and now we get the day goes and we get to the bullish ATR trigger for the day. And then it kind of bounces between this first level and the bullish and so on and so on. So these ATR levels I like to use because I like this multi-days, the week. Okay. And we'll look at the 4-hour chart and I'll just say where's the weekly? What's being respected on the weekly? What has price done on the weekly? What is it showing on a higher time frame level? Okay, so the weekly previous week closed right here. Here's the mean. We gap up, we close above the bullish, and now we push and we hit about 3 levels up. And I'm not super versed on what this means for fib levels, but I know these are based off of fib levels. So this might be like, let's see, maybe I could throw my fib on here and so it's got to be something like that. I know the guy who does this, Sadie, who created this, he has a video tutorial on it. Um, oh, here we go. Okay. So you run your fib, and so this is going to be like whatever, point two something, and it's going to have fib levels on here. So here's your mean, your starting point. This is a +1 move. So it's gone pretty much the whole length of the range for the average true range. Okay. Where did this go up to initially? Again, it's fibs are everywhere. There's a reason why they've been teaching it for a very long time. It starts rejecting this ATR level for the weekly, uh, the 618, so OTE, right? And what do we get? We get a dip for the week all the way down to 0.618 fib level of the average true range. Okay. So going the other way and a rejection off of that level. So these average true ranges are based on how it's like I forget how many years, but it's a decent amount of time of what the average daily range is for price. And it takes all that into consideration. So then if you wanted to like sometimes I'll do this. Now I'll go to swing. This is for the monthly. So the month of November, what has price done? And now we can do the opposite. Where are we at? Okay, so here's one. So really we've just had a deep retracement to 0.79 for these monthly ATR levels. Okay. Failure to capture the for November to capture this bullish ATR trigger. Little move up, then closes below the mean. Failure to recapture that. Kind of interesting how I'm gonna have to start doing this too, but like the 0.1. Because sometimes I'll just, when I know like price wants to go kind of like a certain area, I'll do this because it'll get halfway. Because I'll look at, oh, how come it only got halfway? And that would be like a manipulation move. But that's kind of cool that this panned out for candle bodies not closing above it. So yeah, I like using that because it gives a good idea of like what is price looking for. Like is it showing bullish? And you can see the previous month. Open, bullish, doesn't push, rejects really hard, goes down to this first level, and then look at the rejection at the bearish. So it's failing to close again below the bearish. Then it breaks up to the bullish, back down to mean where the previous month closed at, and then pushes higher. And we almost get a complete +1 ATR move for the month of October. Well, right now it's showing that we have really trended away from anything bullish, and as price gets above the bearish, it's pushing lower. Gathers, pushes lower. Okay, so I would be looking for continuation lower. And again, a -1 move, that's 24,265. Okay. Do we get moves where sometimes it's even more? This would be a -2. Not saying that the month is going to do that, but we might see the very next ATR level past the -1 or somewhere in between, because look at that's where this low is. Okay. So maybe we get a push to here and then movement back up. We'll see. You, again, all these tools are like, nothing's ever going to be the holy grail. Nothing ever is like, oh yeah, I could just blindly take this and it's going to work out every time. These are just tools to look at like price action. But when you have different tools that you can kind of like play off each other, or like you're like, like I don't really know where price wants to go right here. And you're like, but it's really rejecting the bearish level. Okay, well that's telling me every time it taps this bearish level, it's not driving through, because the one time it did drive through, it freaking gapped back above it. So that's showing sensitivity to anything bearish right here. So we can look at, okay, here's a nice OTE retracement. Oh, right back to this where the previous month closed. Nice. Maybe I should start looking for bullish plays. That's it. You're just using tools to help with what is price trying to show you. And yeah, that's pretty much it. This is another currency merchant, Sis, who's in the Discord, created this indicator, and I can't really get into it too much because it's a lot. But it basically maps out Asia overnight session, which is London, and it maps out these ranges. Here's London close, and um, these ranges are very reactive. So like if one side of the range gets ran, like here's a good example of today, one side gets ran, it targets the other side of the range. And what it end up targeting Asia high. So that's a currency merchant teaching that, and I was in his Discord Telegram for a long time. And he has really good stuff on YouTube. And he goes into, and he's all like central time based. So it's like, again, I wouldn't worry about if you're doing everything Eastern, which everyone in the Discord is. I've adjusted some of my stuff because I was doing Central Time based off of his teachings. Um, but I've switched over to Eastern to make it easier for people in the Discord because everyone else is on Eastern Time. But yeah, that's pretty much it. And obviously the KC all in one. Any other questions? Yep, no problem. Yeah, I try to do something like once or twice a week just to go over basics and kind of keep going over these same things that I talked about today. Yeah, I'll upload it and post it to my channel. You can look at previous ones too. I really just go over. You can ask anyone that's been in before. I really go over the same basics of like price and mechanical action around price. I'm a big proponent of the time aspect of trading too. So everything that you get out of JD's mentorship when you're meshing all the time stuff with mechanical action sets you up for some really really good trades because anytime all that stuff meshes, it's like the trade outcome tends to be very favorable. So it's just practicing putting it all together and risk management. Yeah. Yep. When things are going to happen. All right. Well, I'll let everyone get going. You guys have a good weekend. I'll upload this and then I'll put in the channel, and we'll catch you guys later.